So hello traders, hope you are all doing great. So 3 days of price action gone in just one trading session. So Bank Nifty all these days it was struggling to move above 16,000. Once it moved above 36,000 today morning, gone. They brought it all the way down to I think 35,000 and below 35,000. That's a 900 points move in Bank Nifty one way direction. And when it comes to Nifty, I think more than 350 points. So from it was a very terrible day. And interestingly, what we did today is whenever the market gaps up, right, we used to go long in the market. So that's what we were doing all these days, and it was creating trouble. Now today we took a very contra view. Instead of going long in the market, I shorted the market today morning. I shorted 17,000 call option, 16,900, 16,800, and it paid off. Of course, I took a very high risk. Had the market gone on the upside, I would have been in trouble. But what all these days we have been doing that, right? Whenever the market is like gapping up, we are going long, and when it's gapping down, we are shorting the market. We took a contra view today, and it worked out perfectly. But we don't know how many times this is going to work. There are times where market gap down and goes downside, or market gaps up and goes on the upside, right? And today there is a very important event in the US market. US non-farm payroll jobs data is going to come out, and market participants are expecting more than around 350,000 jobs have been added in the month of May, right? So if you ask me what is going to happen or why is this a very important proxy in the market, because whenever jobs are added, it is a very important indicator, and whenever the jobs are added, it is considered that the economy is growing, and obviously companies are also going to grow. Now, is this the right time to add jobs? See, as per anticipation, what last month they have added around, US economy added around 450,000 jobs. This month they have added around 350,000 jobs. It is reducing, but it is still adding the job. At least they have to come below 100,000, right? When the inflations are high, and if the US economy is keep on adding the interest rate, adding the jobs, new jobs, then it is going to end up in inflation. We are already at high inflation. That's why Jerome Powell is coming out and increasing the interest rate. Now they have increased the interest rate last time by 50 basis points. That is the reason why it has reduced from 450,000 to around 350,000. Now going forward also they are going to increase the interest rate high due to higher inflation and other macroeconomic things. And not only that, the market rallied yesterday. If you see, Dow Jones rallied more than 450 points, S&P, Nasdaq, everything rallied. Considering all this US non-farm roll data. But today, what happened is, US futures were kind of in the red, around 50 or 60 points. And after our market closed, there was a very bad news in US market that Elon Musk has told its top executives to not hire any new people because he has a very bad feeling about the US economy. Now that has triggered the US futures, and it is tanking. Already it is down by 200 points. And if I tell you Tesla futures is down by 5% and Apple is down by 2%. So that's a very bad news, and we really don't know what is going to happen today in the US market. So anyway, I am short on the market only. You also, I'm telling you, yesterday I was kind of neutral, but now I am bearish. You go and short the market, you will make excellent money. All you have to do is go and sell. Let me show you. Go and sell. This is the sensible strategy builder. All you have to do is go and sell 17,000 call option, which is trading at 24 rupees. Of course, you don't sell naked call option. and go and buy after selling 17,000, buy 17,300 call option, right? It will cost you only 30,000. The reason why we are buying this 17,300 is to reduce your margin. If you sell a naked 17,000 call option, it will cost you around 80 to 85k. But if you buy this hedge for 17,300, it is going to cost you just 30,000, right? So even if the market first thing, it is not going to go to 17,000. Even if it goes to 17,000, we can do some other adjustment. This trade I will update daily what is happening now. Otherwise, if you are afraid, don't worry. Instead of selling 17,000 call option, go and sell 17,500 call option. Yeah, you go and sell 17,500 call option, and maybe you can add. You can buy 17,800 call option. Still, you will make. This is weekly and it is trading at only very cheap. You can sell 17,000. You can just blindly sell 17,000 call option. Today's high, whatever high was made today, is not going to be taken out. It is going to be very hard for the markets to take out 17,000. Even 16,800 is not going to be taken out, right? So you sell 17,000 call option and buy 17,400 call option. One lot is going to cost you around 35,000, and in case market goes down, you will make a decent profit of around 3% in 1 week, right? So maximum profit is going to be 1,000 and loss is going to be around 20k. So this is a very simple trade you can take if you want. Of course, there is a disclaimer, you will have to do it at your own risk and responsibility, right? And if you see open interest, there is high open interest at around 16,800 call option. People are writing 16,800, 17,000, 17,100, 17,200, all the way to 17,500. And on the downside, people are writing 16,000 put option, 15,000, 16,000 put option they are writing. Let me check, they are writing 16,000. They are writing 16,500 and 16,300 call option. And let us see how markets are going to span out. I think markets are likely to go on the downside only. You don't have to worry. All you have to do is go and sell call option, right? So we are bearish and we have written lots of call option today morning. I have written 17,000. That's what I told. I sold 17,000 for around 45 rupees. I bought it back for around 20 or 15 rupees. So in one day, it gave me a profit of 30 rupees. And we don't sell one lot or two lot, right? So that's a trade which we had taken today. And this is the market scenario. Go short in the market. You will make money. Of course, you will have to hedge your position. And look at this trade. High was around 16,800. Low is around 16,500. More than 300 points move in Nifty. And Bank Nifty is, oh my God, 36,000 all the way to 35,000. And it closed somewhere around 35,200, 250, 700, 800 points move in Bank Nifty. One way move in Bank Nifty. It was purely Bank Nifty which dragged the market. I don't want to get stock specific. So this is the market scenario. As I told you, if you want, you can go and short the market. You are going to make good money. And today afternoon, today, I don't know what is going to happen in the market. As I talk to you, US futures are down by US future is down by 100 points. S&P 500, Nasdaq is down. And even FTSE is down. DAX and CAC, France are almost flat. And Dow Jones is down by 173 points. So this is Dow Jones. It is down by 173 points. And I'm sure FII data would have not yet come. If it has come, they would have sold. It has not yet come. So as I told you, this is the market scenario. And I will update the trade also. You just remember this trade. We have sold 17,000 call option and we have bought 17,300 as a hedge. We will see how this works out. Let us see if I am correct or not, right? Nothing much. Trade safe, sell more call option. Thanks for watching. Take care. Bye.